Before I start, I'm impressed. Thanks for coming. We got lots of slides to cover, so I'm going to run through this fast. You can find me mercenarygeologist.com and at mercenarygeo. We have 52,500 Twitter followers. Nothing I say today can be construed as an offer to go long or short, buy or sell any financial instrument. Why peak gold is fake news. I wrote about this a couple months ago, and now I am talking about it. Rhetorical question. Does this look like peak gold? So this chart, I'll give you some time to digest it, starts in 1900, and it goes to 2017, and it basically shows how gold production has gone up and up and up with very few pauses over the last 118 years. Pauses post-World War I, pauses post-World War II, a big pause from about, 1970 to 1980. Why is that? Well, the price of gold was low. Nixon took us off the gold standard in 1971. It took about 5 years for production to start peaking. What we saw in 1980, where we went into this steep exponential rise, is the advent of heap leach mining and extraction of oxide gold, especially in the western U.S. and especially in Canada. We had another pause in the early to late 2000s. Why is that? Bre-X killed exploration. And since then, we've on another exponential rise with an all-time high of gold produced in the world last year of 3,150 tons of gold. So once again, does this chart look like peak gold? It does not to me. Peak gold, this guy sure thinks so. This is Ian Telfer, the chairman of the board of what used to be known as Gold Corp, maybe no longer. He came out in the Financial Post and said, "We found all the good gold deposits. There's nothing else. We're going to lose gold production. We might as well quit looking because we found them all. All the good gold deposits are gone." He said this back in October or something in the Financial Post. I'm going to call BS there. It might be peak gold production for the majors, but it's not peak gold production for good companies and the world. And here's some charts to show you. You look at Barrick, which peaked in 2006 at 270 tons of gold and gone straight down from there. You look at Newmont, which peaked at in 2003 and 2005 and gone straight down from there until they kind of changed their business model over the last 3 or 4 years. Anglo Gold is really dire. Here's one that doesn't look bad, and that's Goldfields, but we include Sibanye within that, and Sibanye was spun out of Goldfields about 5 or 6 years ago. So to kind of normalize it, we've added those two companies' production. They've remained relatively flat over the last few years. Harmony Gold, I would say, is not a major gold miner anymore. It's gone from almost 102 million tons, and now it's down to about 65 million tons. And finally, Ian Telfer's Gold Corp, which was a very young company when this chart was initiated in 2000. Through acquisitions, built a major gold producer up, now the 4th largest gold producer in the world. But look what's happened over the last 2 years, or let's see, from 2015, the last 2 years we don't have 2018 numbers. 2018 numbers will go down for Goldcorp. So I would argue, yes, Goldcorp did pass its peak gold. Here's the peak gold for the 6 major miners. Major gold mining is not a profitable business. It's not been a successful business since the boom started in 2003. We've written extensively on that with analysis of financial statements. Barrick down 38%, Newmont down 29%, Anglo Gold down almost half of its peak production. Goldfields perform better than the other ones, minus 20%. Look at Harmony Gold. It's down to being a mid-tier gold producer again, down a whopping 63% since its peak in 2004, and Goldcorp down 25% over the last 2 years, and with production going to come in a couple of percent more below in 2018. Now let's look at the mid-tiers, which is a completely different case here. 6 mid-tiers. Production has increased fantastically. Kinross, Agnico Eagle, Newcrest, Randgold, Polyus, and Yamana. Yamana has not performed well, basically because of Greece and the geopolitical climate shut down their gold mines there. But look at how their production has increased, and now we're going to show you that. 290%. I mean, this is phenomenal. Look at Yamana, even though it's died off over the last 3 years, started so low. So you can make the case here that for every major that is failing to continue with its production, the mid-tiers have increased. Let's look at 6 new gold miners. So once again, remember in 2017, record production worldwide. And most of it has been startup small companies that start to grow until if they make major level, they cannot sustain their production. So Endeavor, Oceana, B2, Alamos, New Gold, Kirtland Lake, all have had phenomenal increases over the last, say, 8 to 12 years. Percent of world production, the majors have gone from 41% in 2006, and now they're at about 22% of world production. Meanwhile, the mid-tiers have gone from about 9% of total world production to just under 15, about 14%. This would be the second tier, the next top 9 producers in the world. And then the new 6, which it will be the ones we talked about and I showed you earlier, they've gone from 0 production in 2005, and now they're sitting at about 8% of world production. So the point being here, yes, it is peak gold for the majors, but it's not peak gold for the world or anybody else. And why is that? It's because of prospecting and exploration. The majors are very bad at doing this. They do not replace their reserves. Think about it. If Barrick, which produced essentially 9 million ounces of gold in 2006, that means they've got to find 9 million ounces of gold every year. Well, they can't possibly do that. And since 1996, when they bought Pierina, they have found 1 gold deposit that matched their 2006 production, and that was Alto Chicama, Laguna del Norte, whatever you want to call it, which produced 9.3 million ounces and now is on the verge of shutting down. So they can't possibly sustain their business model because they're not very good at prospecting. They're not very good at exploration. And number one, they don't have the ability to acquire good gold deposits and replace those reserves. And a lot of it has to do also with exploration budgets. And if you look at this chart, and you will see, and this is all exploration, non-ferrous metal, not just gold exploration. But if you look, we peaked in 2012 with $21 billion in exploration worldwide. We've dropped as low as $7 billion in exploration expenses in the ground in 2015. Last year, we were up about $15 billion. So a lot of it has to do with exploration. You don't put the money in the ground, you can't find the deposits. But look at world gold production and how it's continued to rise. So the point would be that there is a lag time. There's a lag time of around 5 to 7 years from exploration budgets going down or going up till we start to see the benefit of that with the gold producers worldwide. So I would say we do expect gold production to decline for the next 4 or 5 years. It hasn't as of 2017. We don't have the 2018 numbers, but this is far from peak gold. So you can kind of see how this lags. We had this drop in gold production from 2003 to 2008, despite the fact that we had very strong budgets for mineral exploration during that period of time. So what we're doing since 2008 is we're reaping the benefit of all the money that was spent from 2003 to 2008 in exploration. Look at some numbers, past, present, and the future of gold mining. Gold mined 1900, 393 tons of gold. Gold mined 2017, 3,150 tons of gold. That's an 8 times annual production, which works out to annualized compound 1.8% yearly growth year over year. And we showed you at the first how that has hardly paused. It pauses because of economics. When the gold price is low or goes down, it pauses after wars. It pauses when gold price, as I said, gold prices go up and down. It went up during the Great Depression because people couldn't find other ways to make money. And also, Roosevelt increased the price from $21 an ounce to $35 an ounce. And these exploration cycles where you have a lag time. In the last 9 years, or 10 years it would be, a 37% increase in gold production. Is this sustainable? Will we continue with this growth, or are we going to decline? I would tend to think we're going to decline for a few years. But peak gold, that's something that exists in the majors and in Telfer's mind, in my opinion. But here's a sobering fact. We have to produce a Carlin trend every year. We produce 98 million ounces of gold, 3,150 tons of gold last year. That is the historic production of the northern part of the Carlin trend, north of I-80. All those deposits, some of the best and largest gold deposits in the world. So that is our task, to replace 98 million ounces of gold a year. And if you don't have the exploration budgets, you're not going to be able to do that. Once again, does this look like peak gold? It does not to me. And I will challenge anybody. It reminds me a lot about this whole peak oil thing that, 7, 8 years ago in my booth at this conference, people would come by and they would want to argue with me because they would say, we've reached peak oil. Well, duh. We produced more oil last year than we ever have. We're up to 100 million barrels of oil per day in the world. A 1.4% annualized growth since 1920. We keep finding more oil. We keep finding better ways to extract oil. It's about technology and man's ingenuity to get what we want when we need it. I am a cornucopian. I am convinced that we, as human beings, as mankind, will find what we need when we need it, or we will find substitutes, or we will develop technology that allows us to use less. The world is a beautiful and bountiful place, and we will find what we need when we need it. Ian Telfer is a Malthusian. A Malthusian is someone who predicts dire consequences for mankind. Are there any big fish left? Well, here's some evidence that there are big fish left. That's a 100-pound halibut, and that's a 160-pound sturgeon that I just caught out here on the Fraser River. And I want to talk to you about geologists and fish, but I'm going to talk to you about Bob Rich. People who fish are the most positive, optimistic people in the world. It's never a question if the glass is half empty or half full. Most anglers see the glass as full and running over. Maybe because they see it as half full and they lie about the other half. But as a geologist, we must be eternal optimists. We must be cornucopians. The world will provide us what we need when we need it. If the demand for gold is high, the price goes up, and we will supply more gold to the world. Where's the next giant gold deposit? Ian Telfer says they're all been found, there are no more. I would suggest that the next giant deposit is going to be found in the Puno orogenic belt of southeastern Peru, which feeds, the mountains feed the world's largest placer gold operations in Madre de Dios, and it is all sourced from the mountains above and the Puno gold deposit, Puno gold belt. There are no major deposits discovered. There are no major deposits in production. But there are people exploring there right now. One of them is on the floor and exhibiting at this conference. I am a shareholder. I will leave it to you to do your own due diligence and find out who it is, and I suggest you go visit. I think this is a likely place where the next major gold deposit in the world is going to be found, developed, and mined. I run a free subscription newsletter, mercenarygeologist.com. If you sign up, you get my stock picks. If you're not a free subscriber, you don't get my stock picks for quite some time, and you probably missed the boat. I thank you for your time and interest. Contact at mercenarygeologist.com. If you send me an email, I will respond unless you are a troll. Thank you very much.